The JPMorgan Equity Premium Income ETF, JEPI, has carved a niche within the crowded field of income-generating investment vehicles. Its allure lies in its potent combination, a diversified portfolio of blue-chip equities and a carefully executed covered call strategy. This article delves deeper into the intricate workings of JEPI, shedding light on its mechanics, performance dynamics, and suitability for various investor profiles. Beyond the headlines, unpacking JEPI's mechanism. JEPI's quest for consistent monthly income unfolds on two levels. The first layer is a meticulously curated portfolio of approximately 100 large-cap U.S. equities. These carefully chosen companies, primarily dividend-paying stalwarts, provide exposure to both long-term capital appreciation and reliable income streams. This bedrock foundation of equity ownership forms the core of JEPI's value proposition. The second layer, where JEPI truly distinguishes itself, is the covered call strategy. This involves periodically selling call options on a portion of the underlying holdings. These options grant the buyer the right to purchase the underlying shares at a predetermined price by a specific date. Think of it as a handshake where JEPI agrees to sell the stock at a fixed price in the future, in exchange for an immediate cash premium. This upfront premium received from selling options forms the backbone of JEPI's consistent monthly distributions. Decoding the performance puzzle, balancing income and growth. JEPI's performance narrative boasts two distinct chapters. On the one hand, it delivers a consistent stream of monthly income, largely independent of market movements. The covered call strategy ensures a steady flow of premium, even in sideways or slightly declining markets. This income advantage has proved particularly attractive for income-dependent investors and retirees. On the other hand, JEPI's total return, encompassing price appreciation and reinvested distributions, tends to lag behind the broader market during bull runs. The covered call strategy acts as a double-edged sword in this scenario. While it protects against significant downturns, it also caps the potential upside by limiting gains when the underlying stocks soar. This trade-off between consistent income and growth potential is a crucial aspect to consider when evaluating JEPI for your portfolio. Beyond metrics, unveiling JEPI's strengths and weaknesses. Like any investment vehicle, JEPI comes with its own set of pros and cons. Understanding these nuances is crucial for making informed investment decisions. Strengths. Consistent income stream. JEPI's covered call strategy delivers a reliable monthly income, even in volatile markets, making it a compelling option for income-focused investors. Capital preservation. By capping potential upside, JEPI acts as a hedge against significant market downturns, offering a measure of downside protection for risk-averse investors. Lower volatility. JEPI's covered call strategy generally exhibits lower volatility than the broader market, making it a suitable choice for those seeking a smoother ride from their investments. Weaknesses. Limited upside potential. JEPI's focus on income generation comes at the cost of limiting potential gains during bull runs. The capped upside through covered calls may underperform the broader market in strong upward trends. Concentration risk. JEPI's portfolio concentrates on a select group of large-cap equities. This can make it more susceptible to individual company or sector performance, potentially amplifying losses if specific holdings underperform significantly. Tax implications. The income generated from covered calls is considered ordinary income and taxed at higher rates compared to qualified dividends. This can impact the overall after-tax return for some investors. A tailored suit. Finding the right fit with JEPI. JEPI's distinct profile resonates with various investor types, though its suitability depends on individual needs and risk tolerance. Here's how it aligns with different profiles. Income-focused investors. retirees, income-dependent individuals, and those seeking to augment their existing income sources find JEPI's consistent monthly distributions, even in volatile markets, highly appealing. Risk-averse investors, for those prioritizing capital preservation over aggressive growth, JEPI's downside protection through covered calls and lower volatility compared to the broad market offers a valuable hedge. Strategic portfolio diversification. Investors seeking to diversify their portfolios with a focus on steady income and downside protection can utilize JEPI as a complementary holding alongside growth-oriented investments. However, JEPI's suitability diminishes for investors seeking uncapped upside potential in bull markets or those with a high tolerance for risk. Its concentrated portfolio and higher tax implications on covered call income also warrant careful consideration in certain situations. Performance dynamics, unveiling JEPI's track record. JEPI's performance history, since its inception in January 2020, reveals its distinct character. While it has delivered a consistent stream of monthly income, averaging around 8.5%, its total return has lagged behind the broader market, particularly during strong uptrends. For instance, in 2023, JEPI's total return of 7.41% stood considerably below the S&P 500's 20.67%. This divergence highlights the trade-off between income generation and capital appreciation inherent to JEPI's strategy. However, this comparison needs further nuance. During volatile periods, like the market correction witnessed in the second half of 2023, JEPI's downside protection shone through. While the S&P 500 declined by 9.34%, JEPI experienced a more muted drop of 5.05%. This risk-mitigating aspect becomes particularly relevant for investors prioritizing consistent income and capital preservation over chasing the highest possible returns. Looking beyond JEPI, comparing alternative income options. JEPI is not the only player in the income-generating game. Several other investment vehicles offer varying approaches to delivering income streams. Examining these alternatives provides a holistic understanding of JEPI's place in the landscape. High dividend ETFs. These ETFs focus on stocks with historically high dividend yields. While they offer potentially higher income than JEPI, they may be exposed to greater volatility and sector concentration depending on the underlying holdings. Closed-end funds, CEFs. These actively managed funds utilize various strategies like options, writing and leverage to generate income. CEFs can offer attractive yields, but come with higher fees and potential complexity compared to JEPI. Dividend-paying individual stocks. Selecting and managing individual dividend-paying stocks can offer flexibility and potentially higher yields than JEPI. However, the responsibility of stock selection, diversification, and reinvestment rests on the investor. Ultimately, the choice between JEPI and other income options hinges on individual investor needs and risk tolerance. JEPI's unique blend of consistent income, downside protection, and relative simplicity makes it a compelling option for investors seeking a reliable and low-maintenance income stream, particularly within a diversified portfolio alongside growth-oriented holdings. The future of JEPI, unfolding opportunities and challenges. As JEPI navigates the evolving market landscape, it faces both opportunities and challenges. Market trends. Rising interest rates and economic uncertainty could increase the demand for JEPI's consistent income and downside protection, attracting a wider investor base. Regulation. Potential regulatory changes surrounding covered calls could impact JEPI's strategy and income generation ability. Innovation. Developments in the ETF space and the emergence of new income-generating strategies could present both competition and potential integration opportunities for JEPI. JPMorgan, the issuer of JEPI, demonstrates continued commitment to the fund's success. Ongoing efforts to optimize the portfolio composition and covered call strategy aim to maintain JEPI's appeal in a dynamic market environment. Final words: JEPI, unveiled and unraveled. JEPI offers a distinct proposition within the investment space, catering to a specific investor need: consistent income generation with downside protection. Its unique mechanism, strengths, and weaknesses necessitate a tailored approach. Understanding its intricacies, performance track record, and comparison with alternative income options empowers investors to make informed decisions on whether JEPI fits their specific portfolio needs and risk tolerance. Ultimately, JEPI, with its compelling blend of income, capital preservation, and relative simplicity, carves a valuable niche for income seekers, particularly within a diversified portfolio seeking to weather market storms with greater peace of mind.